Should you add KMB to your dividend portfolio? Let's talk about that. Hey guys, I'm the Newb investor. Today we'll be looking and screening KMB at purely financial standpoint through our three metrics to see whether the stock is trading at overvalued, fair, or discount prices. And from there, we should see if the stock is a buy or not. KMB currently trades at 131.81 with high price of 158.84 in August 2020. That's 17% of the highs. Market cap of $44.42 billion and PE ratio of 24.62. It gives out an annual dividend of $4.64 per share, a yield of 3.52% of the current price. A lot of people are buying KMB because of their dividend yield, but is it safe? Let's check their payout ratio. With EPS trailing 12 months of 5.36, their payout ratio is 87%. We want it lower than 60%. I'd say at 87, it is at risk if you're buying purely because of their dividend. Let's screen them with our three metrics. First metric, we want an EPS multiple lower than 3. It is 4.59. Doesn't mean it's not a buy. This usually happens with consumer defensive stocks. But by this metric, we're overpaying for the stock if we're buying at these prices. Next metric, we want to pay $1 or less for 1% of the money they're making. We'll take the lowest of the current year's net income and free cash flow yield and the averages of 5 and 10 years of data. The more data, the better, guys. In this video, we'll only be using 5 years of data just to show you our process. The values above are in billions, and the values below are in percentages of their respective revenues. I've included the costs the company is using to keep the operations going. It is around 80% of revenue in average when you add the COGS and OE. They keep 8 to 10% of their revenue in net income or free cash flow. From the 4 highlighted values, we'll take the lowest value to divide the current PE of 24.62. Why the lowest value? We want the lowest value so we can base our lowest assumption from there. In this case, it's 8.86. Use it to divide the current PE, we'd get a discount of 2.78. What this means is we're paying 2.78 times what they're making if we buy the stock at this PE. Third metric, we want to see our discount when we're buying the stock now compared to how it was valued before by the markets. I took the data from a site. I'll put it in the description box below. We have lows of 14 and highs of 74.84. But we'll use the average of 20.69 to divide the current PE of 24.62. Our discount is 1.19. We're paying at a high PE if we're buying at these prices compared to the average PE the stock has traded before. In conclusion, like most stocks in this sector, the stock is overvalued, but it doesn't mean it's not a buy. KMB did not pass any of our metrics. My entry PE of 12 to 16, 12, 14, 16, is an assumption based from 2 times. 2 times, guys, their free cash flow yield. And with the current EPS, the entry price would be around $85, 36% of the current price. That's my assumption of 2 times earnings. If you're comfortable paying 3 times, it's your decision to make. If you're after their dividends, I'd say it is at risk because they're paying investors 87% of what they're earning, leaving them with 13%, little money to continue operations and to buy back shares, which, ultimately bring the stock price higher. So, for now, I won't be buying KMB. I'll be waiting for their EPS to catch up with the price. If you like to invest in these companies, I'd advise you to use a longer time frame of data, like 10 years of data or more. Also, look at their other metrics like long-term debt, current ratio, etc. As always, do your own research.